Okay, today is Thursday, September 14th, and the most interesting news in options land is the launch of the Defiance ETF, QQQ, Zero DTE put writing ETF. And Bloomberg was the first to kind of pick up on this and hat tip them for putting this article out. And what this thing does is it sells anywhere between a zero DTE and 5 days to expiration option. And if we look at the prospectus, they not only have the QQQ NASDAQ fund launching, but they also have an S&P queued up, it looks like, as well as an IWM. And the funny thing that we saw here is the JEPY ticker. As we all know, or many of us know, the JEPI, JP Morgan Enhanced Income Fund, carries a basket of stocks, and they sell index calls against that. And the idea is you're getting a better total return, hopefully, in that strategy. This thing is not the same thing. What these guys are doing is they're selling anywhere between a 0 and 5 day to expiration option, specifically put options. So they'll sell the at the money up to an in the money put. And they say that this generates current income with indirect exposure to the index. Now, the income part of the strategy is obvious as you're selling puts and hopefully collecting or saving that premium. The in the money puts is where the indirect exposure comes from, because if the Qs go up or the NASDAQ goes up, then those in the money puts are losing value. So you're collecting that intrinsic premium, so to speak. So that is the indirect exposure to the NASDAQ. Now, they're targeting 25 basis points, of daily income, and they adjust their positions every single day based on what this target income. So if there's a little too much income, maybe they'll reduce positions or shift them around. If there's not enough income, they say they sell more at the money options, trying to generate what they can. And they indicate that they rebalance at the end of each day. Okay, so we're more or less with you here. They'll invest up to 80% of assets. This is where things start to get a little tricky in my view. They sell naked short puts, and they acknowledge in the prospectus here that you get full exposure to the downside of the market. So it doesn't appear they're doing any other kind of hedging or selling put spreads or anything else. You basically are just short naked puts. So if the market drops sharply, you have that full exposure. And then your upside exposure is capped to the value of whatever the puts that you sold are or was. So this is a tricky balancing act. The idea here is that you can sell every day single day options, basically, or these short dated options. They have a lot more value, and over time you're going to make up for whatever kind of calamity is going on in the market, or you're not going to significantly underperform a big bull market. So any kind of big broad directional move is really going to tag this strategy. We thought this was one of the more interesting lines here. The fund will seek to employ its investment strategy as it relates to the index, regardless of periods of adverse market, economic events, etc. And again, you're selling these in the money puts. It is a challenge here to not see the embedded risks in this, as you're basically just getting short a put. And again, it doesn't make a nod that they can make an adjustment intraday, just that they'll kind of look at it at the end of day. And so it seems like this is going to be a struggle, particularly in an environment here where we're looking at a 10% implied vol or 9% implied vol, and there's just not much to sell. So are they going to step up their exposure? How are they measuring their exposure? It's not totally clear here exactly what's going on. And again, this is the kind of part that we flag as the greater risk here, is that you get unleveraged 100% downside notional exposure to the index, and they only adjust that at the end of the day. So I wish them well. I hope that this is a successful strategy. It'll be certainly something very interesting to watch. But if you were going to kind of set up an ETF that was going to get a lot of attention as the problems of zero DTE, this one optically kind of lines up and highlights, arguably some of those problems. But again, if you get a large trending market and you're able to continually sell these options and we're not getting much movement, then who knows, maybe this will turn out to be okay. So best of luck to Defiance and their investors. This will be certainly very interesting to watch.